Hey guys, I'm Duncan Wilson.
And I'm Sasha Syed, and you're listening to the Mortgage Sweet Spot Podcast, proudly presented to you by Mortgage Suite.
This podcast is your go-to source for expert insights, innovative strategies, and the latest mortgage trends to help you make the most informed decision regarding your mortgage financing. Whether you're a first-time home buyer, a seasoned real estate investor, or maybe somewhere in between, you've come to the right spot.
So sit back, relax, and get ready to discover your mortgage sweet spot.
All right, guys. Today's food sponsor is Costco hot dogs with some fries. Yeah, big shout out. Not only can you eat a good hot dog, you can also shop. Thank you, Costco, for the hot dogs. All right, guys. We're going to move into what today's topic's about. And you know what? I'm going to let the Sashmeister here just tell us what it's all about.
All right. We're talking today about the client. And if you love them, then let them go. I think that was the what do you call it? The slogan that Maddie came up with for this topic. But basically, yeah, we're talking like client-centric approach when staying put makes sense and building trust through honest advice. So really, this one's just focused for the client.
I like it. That's a good topic today. And I believe it was Aristotle that did say, if thy loveth thy clienteth, please letteth goeth in regards to a mortgageth. So we'll get into what it means and what it is like. And Maddie gives us some good pointers here. Maddie, love the pointers.
Excellent.
But basically a brief misconception, like let's talk about the misconception in regards to, can a broker always find a better deal? And I can go into lots of stories about this, but like, I love clients. I love borrowers that come in. They're like, hey, I really hate my bank. I'm coming up for renewal in 2 months and they haven't contacted me. I would say as a broker doing this for years, and even Sasha being a mortgage agent right now, we would take a look, but our one job is to make it, let's say, less obstacles and make it as seamless as possible. And sometimes to make it that seamless process, it involves us telling you as a borrower, it's easier to go and renew with your bank.
Yeah.
You know what I mean? Or your current lender.
Yeah.
So sometimes, guys, it's great. And as a broker, and I've just said this about last week to a couple of clients, like, hey, it's not that I don't want to do your deal. It's not that I would love to do your deal. But at the end of the day, it's better off that you go and do this bridge with the current lender because the rate and the payout and all that. So just be aware. And I would say Sasha can go into this more, but be aware of those brokers and agents, I guess, that no matter what, they'll do the deal without running the numbers, right? You know what I mean?
Funny, because I actually have an example that just happened last week. So I had a new realtor that I'd been prospecting to reach out to me, give me an opportunity to do a bridge. But it turned out that the people didn't have any actual income and that they were buying this house private. Nobody decided to disclose that to me. But when I talked to him, I said, hey, I can do this bridge. It's going to be a little bit expensive, but like, I think the best option is if you can pull the closing date back on the same day, you're going to avoid $23,000 in fees. And so the guy didn't even really realize that was something he can do. And sure enough, I talked to the real estate agent and told her, like, you need to make the closing date the same. I get it. They want to do stuff to the house, but it's a small inconvenience to save $25,000. You know what I mean?
I agree.
And I told the guy too, exactly what you just said. As much as I want to do your deal, like it's not the best thing for you right now.
Yeah, and I would play on that. Like, even if the client or borrower says, no, you have to do the deal. And if we're not doing the fiduciary duty that we're supposed to be doing, and fiduciary duty means we have to it has to benefit you as a borrower. And if we're not benefiting you, we can't actually do the deal. It's against our licensing.
Yeah.
So a couple of pointers that Maddie brought up too on this beautiful piece of paper for us to follow, which I always love, is the fact is brokering is no longer a sales position. Okay. It's evolved. Back in the 90s, brokering was a willy-nilly game of finding people that were kind of maybe in a bad financial state. And yeah, someone would come around and they would know that the client's in this a horrible state and the need for money. And it was taking advantage of the situation. Then closer to 2000s, we seen the US with brokering systems and how they broke down and then the crash happened.
Yeah.
That comes into play, guys. Now I want to give you a big component of this crash. You had analysts and underwriters basically as salespeople. They had sales targets. So it would be like having an accountant, for instance, that you go into, and he has a sales target to do accountancy for you, or a bookkeeper has a sales target. Those kind of jobs don't have sales targets. They have mandates. They have certain quotas. But at the end of the day, there's not a sales target. And this is where you move into the progression of brokering. So I would say about 10 years ago, a lot of selling. And it does come into selling to clients. Like we want to call our borrowers every 3 months, every 6 months, just to check on them, things like that. That's a sales technique. And then selling them to get in a borrower meeting. But then when it comes into that mortgage, we have to look at those numbers. And at that point, that would be the progression from being a salesperson to being more of a financial advisor. And that's what our actual government, the FSRA, Financial Securities Regulatory Authority of Ontario, they are wanting the brokering world to be more financial advisor type positions. And I'm going to say I'm for it, because at the end of the day, there's one thing doing a sale, and it doesn't, it affects the client. And I don't know if I could ever put a client in a worst off position. And if we really want to look into it, and I'll get your opinion because I keep talking too much. I know I do.
That's okay.
Net positive gain. All right, guys. Is there a net positive gain for us to do your mortgage, Mr. or Mrs. Borrower? If there's a net positive gain, meaning there's money being saved, and I can prove to you that maybe over the term, maybe over 5 years, maybe over the next year, that there's money being saved. And okay, now we got to move into it. So for instance, there's 2 types of savings here. There's cash flow savings, and then there's interest cost savings. So for instance, if I can jack up your interest rate, but give you a way lower payment, which typically doesn't happen, I'm actually giving you more cash flow, allowing you to save more money on the side.
Yep.
If you don't need any, and that's the one, if you look at the hierarchy of mortgage needs, I guess, by Pavlov, you know what I mean? Like that guy, whatever his name is, you have cash flow that everybody needs. Then there's interest savings. Okay. So if your cash flow is perfect and everything's fine, then you're going to want to look at the interest cost savings now. Meaning, you know what? I don't need any more cash flow. I make enough money, or I have a net positive at the end of the month. I just want to save as much interest as possible. So cash flow saves you nowadays. It saves you now, and interest costs save you over the term in the long run.
Yeah.
So just note this: if there's no net positive gain in both those categories, as a broker, and Sasha's going to agree with me here, we're not doing your deal. We shouldn't. We should send you back to where you originally started from. So what are some scenarios? What are other scenarios that you find that where you're sitting there saying, you know what, it's better off? Like talk about portability, porting your mortgage, or even the blended increase.
Yeah. So I did have a good client this summer where, he's with one of the lenders that we use a lot, and he had, I think, 9 months left on his mortgage, but we saved him on the rate by just doing a port for the 9 months instead of breaking that and then get him a whole new rate. So there's that. Another good one for like rate savings is people who are consolidating debts. Maybe you have a low interest rate on your first position and you don't want to break that and then incur a penalty. So like, and I'm doing this right now, just do a small HELOC in a second position, wrap up those debts. Credit cards are like 20 to 29% on some cards. So right now I'm doing a HELOC at 10.95 for a small amount. We're avoiding a penalty. We're cutting her interest in half over the next few years, and then we're going to wrap up at renewal. So there's situations like that. And another one too is like for renewals, maybe I can get you maybe 20 or 30 or even 50 beeps of saving on your rate. Sometimes clients don't want to, go through all the paperwork and have to move everything. And then it's a case where it's better for them to just stay put with the lender. Or, we coach them a little bit and say, here, take this to your lender. Tell them you're talking to a broker. Tell them to match the rate, or you're going to go somewhere else. And, overall, it's better for the borrower if that's what they want to do, right?
It's a good suggestion. Yeah. So talking about that, it's funny, like on the sheet here, obviously, transparent recommendations strengthen client relationships. So a lot of times, I know me and Sasha are talking about it. I'm like, Mr. Borrower, I would love to do your mortgage. It's not that I don't want to. You'll save money elsewhere. But that doesn't mean I don't do your brothers, your sisters, your aunts, your uncle, and your grandma's mortgage. Okay. Let's just be honest here. I would love to do all their mortgages. But let's talk about 2 weeks ago. And this is a scenario, guys, I want you to realize. A client has a mortgage for $400,000. They want to go buy a property for $800,000. The bank has quoted them a rate of 5.8%. I don't know, high fives. They came into my office and basically I was turning around saying, how are you at high fives on your new purchase? I don't understand. Well, the bank got me approved and they're redoing my whole mortgage. So here's one big thing I'd like to say right now. I went through a course that's provided by many outlets. I went through the camp course for doing my mortgages, which is now the MPC, Mortgage Professionals Canada. It is a highly entailed course provided by the government and proctored by MPC. Sasha's done the same course as well. The reason why the client was getting a brand new mortgage at their branch bank was because the person behind the desk took I think it was like a 2-day course as a banker to do mortgages and didn't realize what's called a blended increase.
Yep.
So us being around the block, we've been doing this for a long time. There's this beautiful product called a blended increase. And it typically means when you have a current mortgage, probably at 2.9%, maybe you got it 5 years ago and you're in that $400,000 mortgage, you've sold your property, you have the $400,000 mortgage at 2.1%, let's say. What you can do is go back to the bank and say, no, I want a blended increase. And the banker's going to go, what? What is that? And what you have to tell them is, well, I went to my broker and my broker says that you can take that original rate of 2.1 and increase it with the increased amount on the new mortgage and blend those interest rates together. And they do some kind of calculation behind the scenes, but I've seen some blended increase rates go to 3.9 in today's market, whereas I can get them 5.04, maybe 4.99. They're getting 1% cheaper because they're blending the difference on that rate. So just remember this big word. It's like almost like you should be considering a swear word, blend increase. Like go blend increase yourself right now. So I'm just saying that was a scenario where, and sorry, that's a scenario where a client comes in and goes, what's the best option? Well, no offense. The best option for me doing your mortgage is I get the commission. Let's redo the whole damn thing. Let's get it all done. Yeah. But the best option for you, minus me thinking of my commission, because I'll be honest, most times I don't even think of commission. I think of the stress of getting a deal done and how we got to fund a deal. Yeah. I'm not thinking like, oh, I'm making this much money off of it. But the best solution for you is not my commission. It's not my advice. The best solution for you is your best advice you can get, which is sometimes going to save you a lot of money, guys. So there is that. There's porting. You have a mortgage right now, 1.9% because you got it 5 years ago and you're probably told all your buddies and friends and you went to the bar and it was one of the things you talked about. Like, hey, you know what I got? 1.9%. You can actually to adulthood. Yeah, you can keep that mortgage rate. All you have to do is port your mortgage over. So there's sometimes, by the way, guys, where the $400,000 mortgage at the bank branch and the purchase price is $800 and they need to go up a little bit more. Port that mortgage over and possibly grab a second mortgage for the difference. And sometimes that works out to be a blended rate that's a lot lower than what you can actually get even from the branch. So I could keep talking, guy. And me and Sasha could keep you here for 3-4 hours, but no offense, Maddie only gives us 15 minutes. Yeah. And when Maddie goes over 15 minutes, she starts coming down on us saying like, hurry the heck up. This is more editing time. So I would say this, talk to your broker. And if you feel he's being truthful with you and he's got everything done and he's doing the proper job, you'll feel it. You'll feel it in your heart. You'll feel it in your fingers. You'll feel it in your toes. And basically what will happen is you'll just know you're getting the best advice and you can go back to the branch knowing that, hey, I consulted a professional on this and this is what needs done. Yeah. Now, don't get me wrong. There's a lot of mortgage specialists that work for the banks out there that are incredible at what they do as well. And they know all about this. Recently, we heard, obviously, that they don't deal with renewals, by the way. They only deal with intake, which is, to me, is kind of surprising. So we deal with renewals. So if you do want a second opinion, give us a show here, guys. We can help you out. We can talk to you about every option possible. And we do provide this beautiful thing. And it's crazy. It's just nuts to provide this thing I'm talking about. And most clients are like, wow, this is amazing. But it's called a spreadsheet. And spreadsheets should be used by mortgage professionals and bank branches. It's just a spreadsheet. It's called Excel. I think they had Excel classes in grade 9. I fell in love with them right away. But usually get a spreadsheet. A spreadsheet can actually calculate out the differences and what you need to do. And all in all, we would love to do your mortgage, but sometimes it just doesn't make sense. That's all we're trying to say.
Yeah. Good.
You see how sad I am right now? I want to do it. I really want to do your mortgage, but I just can't.
Just let me do it.
I just can't. Yeah, I just can't.
I'll do it real good.
Yeah.
I'll do everything I can. I'll give it everything I got.
He will.
Let me do your mortgage.
He really will. He will.
I'll do your mortgage
He
so
will.
good.
But if it costs you more money, he's not going to do it. He's not. Okay. Thanks, guys. Recap. We don't always need your mortgage. You should go to the place that gives you the best deal. All right.
Second opinions.
Ladies and gentlemen borrowers, thanks for tuning in to the Mortgage Sweet Spot. If you have any suggestions for upcoming episodes or questions for our hosts, me and Sasha, throw them in the comments below.
And if you enjoyed the podcast, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, or you can check us out on YouTube. Once again, thank you for tuning in, and we'll see you on the next one.